Welcome back to the Market Matrix, and today let's talk about wedges. We're going to speak about the rising wedge. So, if you know what a wedge is, then you know what a wedge is. If you don't, well, this is what a wedge is. Something that looks like this. Best way to put it, if you ever had that piece of wood that holds your door in elementary school, in junior high school, in high school, or anywhere basically with a door, I just remember this in high school, junior high school, because that's where I remember seeing it. If you ever had that thing that held your door open, it's sort of something that goes like this. That is the wedge right there. That little thing that holds the door stop, that is the wedge. You just wedge it into the door and it holds the door open. So this pattern gets its name from that shape, the wedge. Let's jump right into it and we'll break it down. So this wedge could come in through many different ways, and we'll see as we go how it can go up, how it can go down, how it can be bullish, how it can be bearish, how it can continue, how it can reverse, and let's just jump right into it. So the stock is running down, it's bouncing up, it's getting tighter, we see what's going on. The rising wedge is now formed. So it's called the rising wedge, but it comes from an initial down move. So it has this down move, and then it goes up into this wedge formation. You might say, oh, this is a bear flag, oh, this is a bearish pennant, something like that. No, a lot of these are very similar. They are triangles in some sorts of ways. They're funny looking triangles, some of them. Some of them are triangles that might seem perfect, but they are not the same. A bear flag is something like this, where it's actually not even a triangle at all. It's a rectangle. And then you have the bullish pennant, which is like this, which has the triangle. This is a wedge, which it goes like this, and it goes like this, coming from down here. So, as we can see, the price gets tighter and tighter and tighter and tighter as it's getting higher and higher and higher. So this makes the price seem a little weird compared to the pennant, which was like this, getting tighter like this. Okay. This one, it's getting tighter, but it's at an angle. It's going up. So you're like, wait, what's going on? Why are the candles getting smaller? Why is the price action getting tighter and tighter and tighter? The range got tighter. The range was wide over here, but over here it's very tight. You can see these candles are starting to overlap over here. This one. There's basically no more room, so something is bound to happen. So when the stock is coming from a down move like this, and then it has this wedge like this, a lot of times what happens is this up move reverses and it goes down. A lot of times. But here's the tricky thing with wedges. Once we see this break, and let's say it does go down, then we'd call it a bearish wedge. At this point, it looks like a bearish wedge. It came from a down move. It's going like this. And if we see the volume, if we see the indicators, the MACD, the RSI, whatever indicators we're using, the averages, maybe we could tie those in to sort of paint us a better picture of what's going on, to sort of indicate to us if it's leaning more towards bearish or bullish. But this example over here, it is bearish. We see this down move over here. We see the price action getting tighter and tighter and tighter. Even though it's going up, price action is getting tighter. So let's see what happens. We're not going to focus on this for the measured move. And all the other formations, like the bear flag, like the bearish pennant, like the broadening bottom, we measured this move. Actually, not the broadening bottom. For the other ones, we measured this move in order for us to know how far we should expect this move to go. In this case, we're not going to do that. We're not going to focus on that. What we're going to expect is we're going to expect a move to these lows over here. The lows it had after the initial down move was over is the move we should expect. Again, this low over here is where we should expect this move down to bring us. So let's see how this plays out. We're going to have an entry once we get a candle to break and close below this bottom support of the wedge. So again, this is resistance of the wedge up here. It's resistance, it's resistance, it's resistance. This is support of the wedge over here where it's constantly holding. It's supporting the price. It's supporting the price. It's supporting the price. Over here, the support breaks. The support no longer holds and it breaks, which is where we are going to enter. Over here, what does this signify? This signifies a weakness in buying activity and an increase in selling activity. So the sellers were strong enough to finally break it out of this pattern. Notice, the buyers were strong enough here, strong enough here, strong enough here to keep it holding this line over here. The sellers were strong enough this whole time to keep it rejecting from this line up here, which naturally gives it that price action which bounces between these two lines. Up until over here, they were basically playing that tug of war game. But at this point, the seller sort of won. So this is where we want to enter the short trade. So here, once we get the candle to close below, we enter the short trade. We get that move down all the way, and that is where we are going to exit the trade. So, quick recap. We see the stock had its down move. It started bouncing up within this tight triangle, getting tighter and tighter and tighter and tighter and tighter, which we call the wedge because it has that wedge shape. And then it broke below it. That's where we want to enter a short trade. We wrote it down. Where's the measured move? No measured move. We just know that we're exiting down at this support, so we get out that trade. Now, let's look at this, but not coming from a down move, coming from an up move. So, we have the stock that's running up, and then it sort of starts forming this wedge formation that's constantly getting tighter as it's going. The rising wedge is now formed. We see over here and over here, it's getting tighter and tighter and tighter and tighter and tighter up until something has to happen. So let's see what happens in this case. Initially, what we were looking for this. We were looking for a move lower, a move below this. So remember from before when we saw the rising wedge, we were anticipating a down move. So at this point, let's say we see this rising wedge forming. Again, remember it's after an up move, but we see this rising wedge forming. We're anticipating a down move. Now at this point, we can't really anticipate that down move as much as we anticipated before. Now, at this point, we have to watch and see. Maybe it rejects over here and it fails down. But if that's not the case, which it doesn't seem like it is because this seems like a solid candle, opened here, closed over here, above this resistance, broke out of this tight range. There's a lot going on to signify that this might keep going higher. So at this point, there is sort of no reason to anticipate this down move. So this down thesis now that we had goes out the window. What we should watch for instead is maybe this rising wedge doesn't reverse. Maybe this doesn't signify a reverse in price action. Maybe this thing continues higher, which in this case, it does. So you need to be able to adapt. You need to be able to watch out. Once you see a rising wedge, okay, cool. Boom, it came from a down move. Let me see what happens. Oh, it's going down. Okay, boom. Let me get in because I know it's going to go down here. In this case, okay, boom. I see a rising wedge. Oh, it doesn't break lower. It breaks higher instead. And it's coming from an up move too. So the buyers were initially over here. Maybe they never got out. Maybe this was some of the buyers getting out. Maybe this was just some of them. You never know. And then they continued pushing it higher. So boom. First from a down move. Consolidation. Maybe this was just some people trying to get in, some people trying to get out, and boom, it just continued. The sellers never left. A strong seller stayed in, and over here, boom, the buyers were strong initially. Pushed it up, kept pushing it up. Again, look, you see this price action going up. It's not like it's going down. Yes, it's moving funny. It's getting smaller. It's getting tighter, the range. But at the same time, it's gliding up. It's gliding up, meaning, okay, the sellers, there's some selling going on. There's some selling, but at the same time, there's still some buying. Enough buying to keep it going. And eventually enough buying to actually break it out of this and keep it going probably with the same momentum as it did over here. Or at least greater momentum than it had over here. So you need to be able to spot the two, spot where they come from. Spot, did they come from a down move and then had the wedge? Did it come from an up move and then have a wedge? Again, this up move, a lot of times this can happen as well, where it has this up move, has a wedge like this, and then it breaks lower. So you need to be able to do two things. Spot where it came from. What that tells you is where the initial pressure was. Over here, the buying pressure was strong. Initially, in the other formation we saw, the selling pressure was strong. So this came from initial aggressive buying. And then what followed it was more buying. This made it go higher. Now, if it started with aggressive buying, and then it got followed by aggressive selling, what we would have saw is this come down here. So you need to pay attention to these two things. Where it came from to see, okay, is it going to switch hands or is it going to stay consistent with that? And then what you need to focus on is what happens over here when it breaks, when the tug of war game is basically over. Are the buyers going to win and send it up above this resistance, or the sellers going to win and send it below this support? So that's what you need to watch out for. Again, time after time, more and more, once we go over more things, we're going to get into moving averages, volume, indicators, a bunch of things, psychology, feeling the market, all these things. Once you start to tie them all together, you would sort of get a better idea. You would sort of flow with the market. You would sort of not have to think, oh my God, what does this pattern mean? Where's the neckline, this, that? It'll just flow with you. You'll be able to, let's say, for example, something simple, double bottom happens. You'll be able to boom, 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 neckline, boom, that's support over there, boom, measured move is going to be this, boom, I'm going to wait for the recess and then get in, and then boom, that's the measured move, it had its measured move, boom, I'm going to get out. If it's going to continue, let me see if the buying is there, bada bing, bada boom, all that stuff. So, piece by piece, day by day, we'll see how it goes, and stay tuned and stay on with the journey.